Good afternoon, everyone. I'm going to turn things over to Allison McCann.
Good afternoon, everyone, and thank you for joining us for today's Business Series conversation. My name is Allison McCann, and I'm the Group Vice President of Development for the Portland Press Herald. Our Business Projects Editor, Carol Coultas, will be moderating the panel discussion today on resources to help business owners and managers as inflation and rising interest rates affect businesses of all sizes. Before we begin, I would like to take a moment to thank our generous sponsors for their support of our program. Thank you to Cross Insurance, Katahdin Trust Company, Goodwill Northern New England, Harvard Pilgrim Healthcare, and our presenting sponsor, Machias Savings Bank. Here to say a few words is Chris Fitzpatrick, Chief of Commercial Lending, and also one of today's panelists. Chris?
Well, thank you very much, Allie. Again, I'm Chris Fitzpatrick, Chief Lending Officer for Machias Savings Bank. We're thrilled to be the presenting sponsor for the Portland Press Herald Business Event Series. So Machias Savings Bank is the fifth largest Maine-based bank, and we are thrilled to be helping businesses and nonprofits across the state reach their yes. We have a number of folks that we've partnered with that are moving Maine forward. So Luke's Lobster, Lone Pine Brewing, Med Rhythms, and Mainly Tubs have partnered with us in that regard. We also say yes to community, as we've donated over $1 million in 2021. And just this week, we announced a $250,000 level of support for the Maine Lobster Association. So very happy to be here. Glad to have everyone and look forward to today's conversation.
Thank you, Chris. And we're so appreciative of your support for our programs as well. So without further ado, I will turn things over to Carol Coultas, and I hope you all enjoy today's conversation. Thank you so much for being here.
Thank you, Allie, and welcome everyone. We are really delighted to have an opportunity to talk about this topic for our audience today. We certainly are dealing with some pretty challenging economic times. Inflation is topped 8% for the first time in decades. And for people who are in small or medium-sized businesses, that means that pretty much all the costs of business have gone up, and making decisions around financing has become more complicated. So things like raw materials, the cost of your contracted services, payroll, everything has gone up. And you may think, well, this is a good time to get a short-term loan. But unfortunately, the rates on loans have also gone up significantly. In fact, I read a Reuters report earlier today that most economists think the Fed is going to raise rates by another 75 basis points next week, which would be the fourth significant raise this year alone as the Fed tries to bring inflation down. So these are indeed challenging times. But I would also say we've seen this before, and so we have some experience to tap into. And all of our panelists today, I think, are going to be making a connection between making financial decisions isn't something you do in a vacuum, and that you need to be aware of all of your business practices and get your house in order to weather what are likely going to be some additional significant challenges as we head into the winter. So I don't know if anybody's ballparking, if anybody's laying bets on whether we're going into a recession. I think all of us hope not, but there are some steps that you should consider taking now to make that, if that becomes a reality, to make the impact less for your particular business. So joining us today to have this conversation are three really experienced people with great insight and expertise. I'll just introduce them in a moment, but first, just a word about our format. So the panelists and I are going to be chatting for about 35 minutes or so, and then we'll open up our process to questions from the audience. Many of you submitted questions in advance, and we have queued those up, and we'll address them during the answer portion of our event today. But if you have a question in live time, please use the Q&A button on the bottom of your navigation bar and submit your question that way. We have a terrific behind-the-scenes Zoom guru named Strawberry Mojni, and she will queue those questions up for us so that we can address those as well. So without any further ado, let me introduce our panelists today. First, we have Daniel Wallace, who is a Senior Vice President, Lending and Investment for CEI. I assume you all know CEI, Coastal Enterprises, Inc., is a business development organization that has been in Maine for decades now. And in his role, Daniel oversees the management and deployment of CEI's $50 million loan fund, successfully leading a team of 12 as they helped Maine small businesses navigate the economic challenges of the pandemic. Daniel has applied a systematic and conscientious approach to business development, financial analysis, and technical assistance, overseeing deployment of $17 million in 73 loans and investments to 71 businesses just in 2020 alone. He holds a BA from Williams College and an MA in Community Planning and Development from the Muskie School of Public Service. Also with us is Jen Cummings. She's the Director of Business Programs at the Finance Authority of Maine, another really valuable resource for businesses in Maine. If you're not familiar with FAME, you should be. Jen has over 15 years of experience as a commercial financial professional, both as a commercial loan officer and a workout officer. She joined FAME in 2013 as Senior Workout Officer and now serves as the Director of Business Programs. A Maine native, Jen received her BS in International Business and Logistics from Maine Maritime Academy, and she earned her MBA from Thomas College. And finally, we have Chris Fitzpatrick, whom you've already heard from today. He is the Chief of Commercial Lending for Machias Savings Bank. With almost 4 decades of banking experience, Chris is responsible for relationships throughout the entire state of Maine, and he assists other lenders with larger client needs. He has a passion for assisting businesses to grow and expand and is motivated by job creation with the hope that our youth will have great opportunities close to home if they desire to stay in Maine. He has a BS in Agricultural Economics from the University of Maine and currently serves on the board of Southern Rustic Development Corporation, Northern Maine Community College Foundation, and Holton High School Alumni Association. And just so you know, I approached Chris about being a panelist because I was really impressed with the section on the Machias Savings Bank website for resources for small businesses. It's really good. You should check it out. But the fact that he's a sponsor has nothing to do with why the invitation was issued to sit here as a panelist. So, but I do have to say, we did make a concession for him. We made sure we timed this so he could participate after his potato harvest was in. So welcome to all of our panelists. And let me ask the first question here. And that is that the combination of rising inflation and increasing interest rates is making business as usual nearly impossible for many small and medium-sized companies. So I'm just curious, what trends are you seeing with respect to capital investments? Are managers putting on planned projects? Are they abandoning expansions? Are they saying, you know what, none of this is going to get any better soon. We're just going to go ahead with our plans anyway and pay higher costs associated with them. I'm just trying to get a lay of the land, what you folks are seeing now. And Chris, why don't you take that question first, please?
Super, happy to, Carol, and thank you very much. At the present time, our loan pipeline continues to be very strong. It's not as strong as it was at the first of the year, but that was when it was at a record high level. We have a number of folks that continue to have legitimate needs in the current environment, with employees being challenging to come by. Folks are looking to make capital expenditures for whatever type of efficiency improvements that they can make. And yes, interest rates are higher today than they were. Many people have been thinking about some of these projects over the last 2 or 3 years. So really, when they started thinking about them, rates were somewhat similar to where they are today. The white hair on the head lets you know, and the 40 years in banking, lets you know that I've been through a little bit of this before, which not everyone that's listening to us here this afternoon has been. But throughout the 1990s, prime was never lower than 6%. And it started at 10.5. So throughout that entire period of time, there were needs. We were able to continue to help people with projects. At the end of the day, when people put the pencil to the paper and determine whether it will pay or won't pay, is what supports them and the financial institutions to be able to assist them in moving forward. So bottom line, we continue to see current strong activity. I think there was a little bit of a rush on because people knew rates were going to continue to go up. So it was like, let's get it done sooner, if possible. But we're continuing to run into some supply chain issues where folks can't do it as quickly as they would like. And we still stand ready to assist in that regard.
So when you say efficiency, Chris, are you speaking about efficiencies like on a production line, or are you talking about energy efficiency because of what's been happening with our fuel and utility costs?
Yeah, we're actually seeing both, Carol, at this stage. The manufacturing line, but even in the retail world, I had someone come back the other day who'd been out west, and they went to a bar and there was a robot serving the drinks.
Wow.
And just those types of things that we haven't really thought about, but if you're running a bar and you can't find help enough, there's an option. So I think we'll see more of that as time goes on.
Okay. Wow. Interesting. Thank you. How about you, Jen? What are you seeing?
Similar to Chris, we're seeing steady stream of applications coming in. I think people are a little more cautious about expenditures at the current moment, given the rise in interest rates. But I also think people are planning for the future and looking down the road and maybe pulling back a little bit on certain projects. And we do have a couple programs that we can certainly get into that might combat some of that interest rate increases right now that we're seeing. But I do think overall, people are still feeling the effects of the pandemic, and then coincide that with the interest rate increases, that there are some slowing down that we're starting to see coming into that as this next round of rates will be going up, as we are hearing.
And are you seeing any of that focused on a particular industry or a particular sector at all, or do you see it kind of across the board?
That's a really good question. I have not seen it specific to industry. I think it's really across the board. Even in our personal lives, we're pulling back a little bit on spending, and I think that flows through to a business owner making decisions for their company on a day-to-day basis.
Okay, good. Thank you. And Daniel, how about you? What are you seeing at CEI?
Yeah, thanks, Carol. You actually reminded me I need to update my bio because all the stats you quoted are 2 years old. So I would just, I'm not going to reel through them all, but I will say that CEI is coming off its largest year ever.
Wow.
We do have a fiscal year that ends in September. So fiscal 22 for us was very, very strong. We are beginning to see perhaps a little bit of a slowdown in our meat and potatoes small business requests, not much, but a little bit. But perhaps oddly to me, construction volume, construction lending is still up and even accelerating.
Really?
Despite years of construction costs, supply chain, and now inflation. And our smaller startup loans remain quite robust as well. I will say I'm not an economist, but I try to be an optimist. We did get a good GDP report this morning, up 2.6%. So that at least for the moment allays the recession for a couple more months. But it was good to see some trends going in the right direction there. So, what we're really seeing at the end of the day is a mix. And the core challenge for a lot of our businesses right now has been alluded to a couple of times already, is labor, is finding people. I'm here in the office today, and we went to this morning, a few of us went to the coffee shop to get a cup of coffee, and it was closed. I'm right here in downtown Brunswick, and the coffee shop was closed with a sign on the door. We don't have any staff today, so we have to close. So we have a lot getting over the pandemic, trying to figure out the labor situation, and now looking at inflation. It's a bit of a tsunami, but I think that in general, where, like Chris was alluding to, I think we as a financing community are in a good place to be there and support our clients moving forward and help with those necessary investments.
Of the folks who are going ahead with their construction lending, is there I was being a little bit flip when I said that people are going forward because they don't see rates coming down anytime soon in my introductory remarks, but is that why? Or, is there a theme of the people who are going forward with the construction, with building and expanding?
CEI is not primarily a construction lender, so my data here is somewhat anecdotal. We tend to be tied to some larger redevelopment projects of older housing stock, building stock, mill building stock that is coming back, being brought back to life. So that effort, which leverages a number of different financing sources, including things like tax credits, seems to still have real life in it, but I'm fairly modest there. So I would turn to Chris or Jen to add any other comments.
I think for us, the ones that we're seeing are really construction projects. And like Dan, we don't do a ton, but we do get involved in some. They've just taken a lot longer to complete than our typical 1 year or 6 month, 9 month projection because of supply chain issues. So I think Dan made a really good point. Everything seems to be coming to a head now that we've been experiencing over the last few years. The other thing I would say about the project is that it seems now that there's multiple lenders involved in one project versus before where it was maybe solely one individual financer. Now we're all partnering together to try to maintain some risk mitigation throughout these projects.
Cool.
Yeah, from my standpoint too, Carol, we're seeing a lot on the multifamily right now with the cost of single family housing. Those have slowed down from a permit perspective, but multifamily is up because that seems to be a more affordable option for some folks at this point in time. So we've got that side that's still going strong on the construction. And then with some of the other development projects, I alluded a little earlier, some of these have been 2 and 3 years in the pipeline. So when they modeled them, they were using rates similar to where we are today. So they still make sense.
Cool, thank you. Okay, so let's sort of get to the nitty gritty then. And that is, so what kind of financing products are out there? I know from the questions we received from the registrants that there's a lot of interest in low interest or no interest commercial lending. And so I wonder, Jen, I'm going to toss this question to you first because I know that you're overseeing 2 of those programs. But beyond that, I'd like to hear if you folks are seeing any innovation from either the private financing institutions or government. And maybe something like you were just saying, that the financial institutions are collaborating more as a way to mitigate risk is something that would fall under the innovation category. But for the folks who are trying to find a good financing option for them, can we talk a little about what you see working? And Jen, can you begin that conversation, please?
Sure. So as Carol mentioned, the Finance Authority of Maine is a quasi-state agency, and we do get allocations of funding through the state subsequently from the federal treasury. So with this new round of American Rescue Plan Act funding, we actually were the recipient of $120 million amongst two separate programs. One of them was solely focused on COVID relief efforts. It was called Thrive Maine. We did one round of opened that up, and it was essentially oversubscribed very quickly, and we've shut applications off for that. That was a forgivable loan program, but there will be another round of applications coming out in 2023. So stay tuned for that. But again, that was solely tied to pandemic expenses or revenue loss because of the pandemic. So we are the other option that the other program that we recently launched is called Grow Maine, and that's on our website. And this is a program through the State Small Business Credit Initiative that allocated about $62 million to the state of Maine. Every state in the country received an allocation of funding, and this money is to be spent on growth or expansion of companies or startups of companies. And it's not solely for the use of, but it also provides incentives for socially economic disadvantaged individuals or companies that have under 10 employees or are in areas of the state that are deemed certified investment areas. And that's a quick check of a link. And through one of those three avenues, you can earn lower interest rates. So the rate on the program in general, if you don't fit any of those qualifications, is prime plus 0. And if you are in one of those buckets that I mentioned, it's prime minus 2%. Wow. And that's a fixed interest rate. And the more in-depth parameters of the program is it can be used for real estate purchase, business purchase, expansion, working capital, renovations. Can't be used for refinancing or speculative investment or equity buyout. But it is pretty expansive, and it does require a 1-to-1 match at a minimum. We like to see a 1-to-3 match, and that's kind of plays into the risk mitigation piece that I mentioned earlier, in that Maine's a really big geographical state, but it's really small when it comes to our partners that we deal with on a financing level. And it's really a team sport. And we really try to partner up with whether it's the banks or folks at Dan's organization. We participate in loans all the time. And that program has 3 ways to apply. So the one I kind of just touched on is a direct loan. So that's a direct from FAME, or there is multiple other lenders throughout the state that have signed on to partner with us, CEI being one of them. So Dan's organization is one of those lenders. And we tried to make that footprint throughout the state. So every, think Northern Maine Development Company, Greater Portland Council of Government, all these separate organizations are able to utilize the funds that flow through FAME, but kind of more boots on the ground around the state, have this other benefit to be able to get those, get the dollars out there. And it is important that we get them out quickly, because it springboards us to get the next round of funding. So we have a certain amount of time to get through one round of funding before we get the next round. So there's a direct loan component, and then there's also an equity component to it as well. And we do have equity partners throughout the state. So CEI Ventures, Maine Venture Fund, and Maine Technology Institute are all equity partners for that program. So they're able to put equity investments into Maine companies. And then additionally, we have a commercial loan insurance product, which is not 100% rolled out yet, but we're working through that. And that's our traditional FAME bread and butter, similar to what the SBA does on a national level. We do on a state level to ensure loans for financial institutions, banks, and credit unions to mitigate risk for them. And we're going to be able to use this Grow Maine money to fund our reserves to do that program. So has a little bit more loose approval standards, and the fees and rates are more comparable than what we're seeing in the traditional lending realm.
Are the Grow loans available to nonprofits, or do you have to be a for-profit entity?
No, they're available to nonprofits as well as for-profit companies. Yep.
Cool. Cool.
And there is a cap, I should have mentioned that, $5 million cap on those loans.
Well, that's good news for some folks, right? If they weren't aware of these programs, that's, I mean, I think that those are pretty significant. Do you know when the Thrive Loan program will be up and running again next year?
We're right now we're working through our applications that we currently have, and we want to do some data analysis and really see if we have some opportunities for improvement for the next round. We're thinking between February and March next year.
Okay. And how will people know about that? Should they just check your website, or what are taking out ads in the newspaper?
They can check our website. We also had a pretty generous social media campaign, as well as radio and postcards to, I think, 50,000 businesses in the state. So we'll be doing the same marketing efforts the next time around, but also check our website and you can sign up for our newsletter, which has all that information on it.
Great. Thank you. Thank you.
Thanks.
Daniel and Chris, what have you guys got?
That's not fair, Carol.
I know. That's a hard act to follow.
I mean, what Fame is able to do right now is absolutely a go-to. I mean, from my perspective, it's been kind of like the Wild West the past couple of years. There have been a lot of different opportunities that have come and gone really fast from a lot of different organizations. And right now, frankly, for better or for worse, I'm seeing that mostly settled down.
Okay.
Most of those products and projects, grant programs funded out of various COVID inspired relief are largely come and gone. I think there are a couple of more tranches perhaps out of the Maine Technology Institute. CEI continues with our standard products and services. I can never lose an opportunity to say something about our wicked fast loans, which are small dollar loans. We do a 3-day turnaround for startups and existing businesses, 3-day turnaround on approvals. So if you're a business looking for $15,000, $20,000, $25,000, please have a look at that program. It's a highly expedited application, and we just secure, lenders love to talk about collateral, but we secure on whatever you've got. So if it's a file cabinet, that's what we secure. So I'm not meaning to be glib there. In fact, I'm trying to say that it's an opportunity for a lot of people who may not have significant assets in their business to get a startup or modest expansion loan. Outside of that, we have our standard products and services, and CEI is a loan fund focused on trying to help borrowers who might not be able to access bank credit. So we sort of combine very nicely with what Jen offers and what Chris offers. So if you're fitting into that group, we specialize in tailoring loan packages that are going to work for you. So we try to provide that flexible financing. That's a long way of saying nothing special right now, but we do want to work with you.
Good, thank you. And how about your friendly local banker, Chris?
Well, I'm at a severe disadvantage here because we have a quasi-municipal, we have a nonprofit, and then we have the old nasty for-profit bank. So, we don't have anything for grants at this stage, but we do work very closely with both Fame and CEI and any other organization that we're aware of. I would encourage the folks that are listening to us to check all of our websites on a regular basis. Reach out and have a conversation because it's very fluid right now, and we never know what the next program is going to be. There are Fame has a couple of options that we can utilize to buy down interest rates, whether it be for manufacturing businesses. Maine Bond Bank's got one for the forestry industry. So there's just a lot out there that have the conversation and run it by your local banker and see if they can come up with some ideas to help you out. So
good, thank you. That's a lot of information the three of you just offered, and I'm sure that is very valuable to the people who have logged in. And as I had mentioned to all of you when I spoke with you initially, we are recording this, and we will send it out to all of the folks with a link to the recording and a summary of the highlights of this conversation to everyone who has registered, and then we'll post it on our website. So I think that this has been really helpful, even just to this point, in terms of cluing people in on what resources are out there. And so, and then because you guys spoke about this in our pre-interviews, what general advice are you offering your clients? I know Chris and Dan, that both of you said it's really important to make sure that your clients' financial houses are in order, that their business plans are up to date, and that they should be prepared to make tough decisions in the event of a recession. So I'm just wondering, can you offer some specifics? And Dan, why don't you take that one first?
Sure. So I actually want to read a quote that one of my lenders forwarded me. It is a restaurant client, because I think this points in the direction that I want to go. So the quote is, food and wage inflation has been consistent and brutal throughout the past year. Now that we are beyond tourist season, we're going to shut down for a week, take a hard look at our menu, and eliminate anything that has a cost of goods greater than 25%. We will reopen with an additional day of service, and we have started serving brunch twice a week, which is our most profitable service. So this is a restaurant. It's a tough business, as everybody knows, but they're taking a really, really hard look at where their cost structure is, at their margins, and they're thinking about what is best, what is most profitable for them, and they're doubling down on that. And I think that's what essentially what a lot of our small businesses have to do, at least the ones that I interact with. It's hard to do this after 2.5 years of the sky falling, to keep saying, look, you've got to look at your fundamentals. You've got to look at what's driving your business. You've got to react to your core market. You've got to know your margins. But from my perspective, one big piece of advice is know your business, know the nuts and bolts. There's no fat right now. There's probably not a whole lot more that you can cut, given where you've been the past couple of years. But focusing in on those products and services that you provide that are netting you income. And there are a lot of resources out there to help. We have a pretty robust network of business advisors in the state, whether it's through the SBDC or through SCORE or through some other outlets. We continue to have various programs in different sectors that help support business development. So I guess that's my top line message, Carol. For some people, a line of credit as sort of an emergency valve might be valuable. Okay. I'm not necessarily, as I did not during 2020, pushing folks to take on debt right now. I mean, you really need to understand how that's going to be used. I mean, a critical investment in equipment or something, sure, but it's not the best time to be looking for working capital from a financial institution, despite the labor challenges. But so maybe a line of credit makes sense, but you've really got to understand where your business is, the fundamentals, how you're going to make it through the next 18 months, and then be making your financial decisions and debt related decisions from that place of knowledge.
Okay, that's all really good advice. Chris, what are you offering for advice?
Very similar to Dan, but the flexibility is name of the game. Cash is king. Make sure that you've got some reserves. Don't overextend yourself at this point in time. The conversations that we're having is, it's awful easy to dig a hole right now if you aren't on top of your costs. So as much as people hate to increase their pricing, they need to do it regularly and consistently right now. And another restaurant example, I'm talking to one of my customers, and he said he realized that the price of fish had gone up $1.50 a pound on him, and he does a big fish fry on Friday nights. And he said, I can't go to the extent that I need to, but I think he went up $1 a plate now, and in 90 days or so, if the price doesn't settle back down, he's prepared to go again. So he's making a choice of not exiting that certain dish at this point in time, but he's staying on top of what the costs are and making sure that if he digs a hole, it's a little one, not a deep one, because there's just not enough in it to come out of those big holes. So my advice, be on top of it all the time. And people really struggle with laying people off, and none of us want to see people get laid off. But if you got 20 employees and you can reduce it to 18, maybe you cut your hours a little bit, you're preserving 18 jobs instead of risking all 20 jobs. So those are things that people just need to think about, that are hard personal decisions, but valid business decisions.
Yeah, totally. And how about you, Jen? Are you offering any general advice to your clients?
Yeah, I would say, obviously, in addition to what Dan and Chris said, because that's kind of I think that's the most important piece. The only thing I would add is to say, if you find that you have a little late to the game in making those decisions, make sure you're really transparent with your lender. I think it's really important to make sure that transparency and that communication is really top of mind, and making sure that they know if there's trouble ahead, and making, because there are things that the lending environment is able to do, including restructuring your financing, and maybe stretching out an amortization or something to help your debt service on a monthly basis. You can continue to afford what you need to, and have a little more time to make those necessary adjustments if you weren't as quick to the curve, I guess.
Good, thank you. All of that, I think, is really helpful. And I wanted to just ask a broad question about, are there other resources maybe that are less well known, or are not things that you normally would consider? And I'm aware, for instance, that there's a new law taking effect that will require businesses with 5 employees or more to begin offering retirement programs. And actually, Baker, Newman and Noyes has a really good primer on this. If this is news to anyone in our audience, you need to sort of get up to speed on this pretty quickly. But are there other resources that maybe are not obvious? And Chris, I'm going to ask you, because I know the answer from you for that question, and it was specific to the new retirement requirements.
So yeah, my comment in the retirement side is that kicks in April 1st for anybody with more than 25 employees, and then it phases in so that it's April of next year for anybody with more than 5 employees. But to be ahead of the game, folks should be having conversations with their payroll company, with their tax advisor, just being prepared for some of these things, because as Carol says, this is mandatory. There is an opt-out by the employee, but you have to do that every year or it kicks back in. We're still waiting for some of the guidance in that regard, but it's just something that folks really do need to be aware of at this point.
And you said that payroll companies are staying abreast of this, and that they may be a good resource for their clients to understand what are the ins and outs of this new requirement.
and folks that haven't historically used a payroll company, that they may find that efficiency wise, all of a sudden it does make some sense to look in that regard. So one of the other things that I would just remind any existing business owner is the employee retention credit. There's some substantial tax refunds under that from over the last couple of years, and if you haven't heard about it or taken advantage of it, again, your tax advisor is a great one to speak with. But I mean, that can be up to $26,000 for each employee that you had, so it can be a significant sum of money.
Yep. Anything else from you folks that you want to throw in? Here's a resource maybe you haven't thought about.
I would say perhaps people have thought about it, but on the state of Maine's website under the Department of Economic and Community Development, there's a really nice, robust resource list from everything from tax credits to, opportunity zone. There's a bunch of different really nice presentation all together in one spot. It's a good place to look if you're not sure where to start.
Okay.
My other go-to in that regard, Jen, is the SBDC. Has got some great little videos, tutorials on a number of subjects. So definitely encourage folks to utilize that as well.
And Carol, I'll just add one item that CEI offers. We do have a variety of services here at CEI around lending, but not necessarily lending. One of them is a group called our Financial Development Services Group. So that we need to think about renaming that. But those folks support people who have impacted credit. And they actually also do some housing counseling, but I'll focus on impacted credit. As inflation does its thing and things get tighter, all of our business owners, all of us as Mainers are making difficult decisions about how to use our money. And for a lot of us, that means making difficult choices about what to pay and what not to pay. And if you're a business owner, obviously, those decisions also impact your capacity to get loans or other financial services. If your credit scores are still largely used, I think at all of our organizations, but y'all can wave me off if that's not true. But the point here is that we have some counselors here who can work with you, think about personal credit management plans, thinking about rebuilding your credit, thinking about how to balance school loans and medical bills and whatever else might pop up on there. So I really think that can be a resource for folks. And we see, relatively fast improvements in people's credit in a matter of 2-3 months with a little bit of focus on how you're managing your finances. And for business owners, that's gonna be important.
Great. All of that, I think, really helpful information. And I'm also sort of aware of where we are with our time today. So even though I had a couple more questions for our panelists, I'm going to switch gears and let's take some questions. So Strawberry, can you queue up the first question from our Q&A button, please?
Sure thing. I think this might have been in reference to Jen's credentials at the beginning, but what is a workout officer?
That was always a joke at work because I used to be a CrossFit instructor as well. So the workout is a fancy term for working with borrowers that are past due. So classified assets, helping people restructure their existing debt obligations, and also actually, if it came down to it, foreclosing and liquidating companies. That's my background. Yeah.
And a CrossFit instructor. So
yes.
Let's take a question from the folks who sent them in with their registrations. And this was one of the first ones that caught my eye. Has the commercial loan scrutinization process on the secondary market become more complex or rigorous in the last few years? How has that affected the loan requirements from the lender to the commercial operator? And so I think that that this person is trying to get us more insight into what's playing into the interest rates that they are looking at when they go out and seek a loan. So
I'll start with that one, I guess, and I think they were referencing securitization of the bank selling loans off, and what the market is looking for in that regard.
mm-hmm.
And I would say most banks, unless it's a substantial sized credit, are holding their loans. Yes, the residential side gets packaged up and sold off in a lot of cases, but most commercial get held on the books. So really any changes are within the individual bank and the industry itself. We're starting again to see some requests that aren't as strong as they were 2 or 3 years ago. We're turning and before the group joined us today, talking to Jen a little bit about the fact that we're starting to utilize FAME's guarantee program, the SBA guarantee program, Rural Development's guarantee program, a little more than we have over the last 2 or 3 years. But a deal that makes sense is going to get done, and banks need loans. So at the end of the day, we're looking for ways to try and say yes.
Thank you. Anyone else want to address that question?
I think I'd just add, not directly to the question that was asked. I think Chris handled that portion of it. I would just say that I know, speaking for FAME, our decisions are based on credit, but we typically get the borrowers that were declined from traditional sources. I know Dan mentioned that CEI is in that same boat. And our kind of mission is a little bit different in that we're looking at economic development opportunities, as well as good paying jobs and what area of the state the investment's going to go in. So looking at it a little more, from a different vantage point, because our mission is different than different organizations. We all have our own kind of silo of what we're looking at.
Mm-hmm. And how about you, Dan? Is there anything from CEI's perspective?
Yeah, I don't have much to offer because we don't sell our loans on the secondary market. And we do that somewhat deliberately, actually, because we have a very high touch business model. We work with clients when they start thinking about their business. We work with clients while they're running their business, while they're in our portfolio. And we really want to be there for the businesses if they do have struggles through the years. So for us, it's actually so far been a critical part of what we do to keep all of our loans in-house and be there and be able to help folks. So yeah, no, I don't have any insights to offer on that question.
Okay, that's okay. Strawberry, let's take the next question in the Q&A button.
Sure. Question from Jay. I've noticed that many of the programs, such as the Grow Maine program, are not available for real estate investment businesses. Are there any programs you recommend for major repairs or renovations to rental units or investment properties, which may not require exceptional credit levels?
So specific to the Grow Maine program, it would be okay if a portion of the property were occupied by an owner, meaning a business owner. So really specific and geared towards business growth, as opposed to investment real estate. And for that, I think I would recommend talking to your traditional bankers, such as Chris, for that type of project. We have really strict guidelines statutorily that we have to follow in regards to investment real estate. And then if the credit piece of that could be combated with guarantees from other agencies that may accept things like that. I know we can't, but perhaps something like SBA or USDA may be able to, or RD.
Yeah, if it's residential real estate, there are several limitations for programs to layer on top of the bank. But if it's a commercial type property with commercial tenants in it, then there's a few more options in that regard. So really have to look at it on a case-by-case basis, but certainly be happy to and try to figure out a way.
And Daniel, anything from CEI? You had mentioned some real estate portfolio work previously, but for investing in something like that, is that different?
Well, potentially, the devil's in the details.
Right.
I mean, if you're sort of developing affordable housing, or you're doing some significant energy efficiency or greening of buildings, and CEI is going to be an option for you. But generally speaking, it's only in very particular ways that we get involved with the real estate investment.
Okay. Let me take another question that had been submitted in advance. And that was, and this is very specific, but it's, what should I consider when taking a loan in the context of what I have in cash reserves? So, I mean, I think that someone's just trying, well, I have this much money in cash reserves. Should I tap this, or should I look for financing through a conventional loan? Like, how do you advise a small business owner when they're trying to make a decision like that?
Happy to again lead off on that one, but you know, I think it's important, as I mentioned before, cash is king. So you don't want to utilize all of your cash in that regard. Daniel had made the very good suggestion earlier about having a line of credit available, so that you know, if you do run low on your cash reserves, you know where you're going to be able to get the liquidity to pay the bills timely, keep the payroll paid, and all of those things. So I think that excess cash right now, you're not getting paid much for it. Loan rates are going up. Not in the best interest of the bank, but certainly in the best interest of our borrowers, which we're telling them, use some of that cash because you'll get a better return out of that than anything else you're going to do right now. So don't use it all, but don't keep too much on the sidelines when you have the borrowing capability with a line of credit to fall back on.
Cool, thank you. Jen or Daniel, anything to add to that?
I think I would mimic what Chris said.
Yeah. Back to the fundamentals, know your business, right? Because Chris was dancing around a little bit where that balance is for your business. What is the right amount of cash to have in reserve versus perhaps seeking another type of capital? But certainly loans are getting expensive right now, or at least more expensive. And that comes with a cost. So you've got to be very, very careful if you're going to take on a debt burden just to bolster your cash reserves because of that cost. So it's pretty dynamic. It's hard to answer that one sort of without the gray area. But finding that balance for your business and then thinking about emergency release valves like lines of credit, may be the way to go.
I'm going to sneak in one of my questions now because I really like this question and I'm curious what your answers are. But I wonder, do you see, are there any particular policy changes that you could see being made at the state or the federal level that would really have an impact in terms of helping Maine businesses during these challenging times, or God forbid, if we enter a recession? I mean, what in your perspective, what would be most helpful? What would benefit small and medium-sized businesses the most? Oh, long pause. Daniel, I'm gonna ask you to, no, wait, Chris was just about to speak. So Chris, you go ahead first.
You're welcome, Daniel. It's a really tough question. And in the current political environment, an awful lot has been done, an awful lot has been given. I think we're going to need to see some more things. I'll use the lobster industry as an example right now. I mean, if these regulations, overly burdensome requirements come down the path, there's going to need to be a coordinated effort between the state and financial institutions, every entity, to try and figure out ways to give some relief to people. But beyond that, I don't see a whole lot that is business friendly in the short term.
Anyone else want to offer anything there? I know that you have restrictions on what you can say, certainly, and I'm not looking for a political answer, but I'm just wondering from a policy perspective, if there are things that would just be more beneficial.
Well, I'm gonna duck the question too, but it's partly because I don't have or largely because I don't have a great answer for you, Carol. It would be interesting just to bring together financial services and policy potentially a little bit more. So I guess that's my recommendation is I came up with something, convene some group to talk about, this is totally ducking it, but convene some group to think about what could be done. I mean, there was a huge amount of support past couple of years.
Right.
So what resources remain, what capacity remains, how could that be tailored? Is it local? Is it federal? I would simply hope that we continue to have the support of our businesses that we've seen in recent years, but maybe there's a way to convene, start up a task force.
Well, but I think if I understand you correctly, the idea is to be proactive as opposed to reactive, that it is amazing what we were able to do to get through the pandemic on a whole bunch of levels, whether it was private business or it was the government or it was public institutions. I mean, everybody kind of really rallied. And is there a way to capture that momentum and have it go forward in terms of just making it easier to do business? So you're not reacting to a horrible situation, but you've said, oh, we have these institutions in place, or we have these communications or these relationships, and being able to capitalize on them. So, oh, we have one more question in the queue, so let's take that. You're off the hook, Jen.
Thank goodness.
Is the CEI Women's Business Center in Machias strictly available to only women-owned businesses?
No. I mean, there's a focus and concentration on women-owned businesses, but it is not exclusive.
And that's for all of the women, for the CEI Women Business programs, right?
Yeah,
that they're not
we actually have 3 women's business centers at this point in 3 different areas of the state, and that is true for all 3.
Great. Well, I think that's probably a good note to end things on. I would like very much to thank all of you for attending and remind you that you'll receive a link to this in your inbox at some point, probably next week. I'd like to thank our sponsors. We wouldn't be able to do this without you. But most importantly, I would love to thank our panelists, because you guys were, I think, really terrific. And the information you shared is valuable, and I'm sure will help a whole host of people get ready for what may be even tougher economic times, but certainly to get through what we're dealing with right now. So thank you, all of you. And until next time, this is the Press Herald, our business series, our conversations. We'll see you in another month or so. Thanks. Good afternoon.
Thank you.
Bye.
Thanks, guys.
Thank you.